Though ebooks have become something more convenient and affordable for people, many true bookworms still prefer strolling through the aisles of a well-stocked bookstore and flipping through the pages in an old style. And one of the most recognizable booksellers across the world that lets you do just that is Barnes & Noble, operating more than 625 stores nationwide with more than 190 million sold titles a year. Long before the McDonald brothers imagined an assembly line for hamburgers, Barnes & Noble used their New York store to experiment with a revolutionary new layout. Since the 1940s, customers would approach an employee who filled out a sales slip, then another assistant would package the book, while a third would handle the money to complete the transaction. Nowadays, Barnes & Noble is the second largest retailer of magazines in America, carrying about 5,500 magazine titles and nearly 1,000 newspaper titles. Its cafes pour approximately 50.9 million beverages, bake 10.5 million cookies, serve 2.1 million cake and cheesecake slices, and grill 2 million sandwiches and flatbreads annually. But still, it seems like the bookseller has been experiencing some difficulties for quite some time. And with that said, let's take a look at 10 reasons why Barnes & Noble will cease to exist. Blood was drawn early and often when Amazon.com and BarnesandNoble.com vied for e-commerce dominance in the late 1990s. Besides, the latter even sued the former for claiming to be Earth's biggest bookstore. While Amazon got the brunt of compliments for their pioneering internet venture, they weren't first out of the gate. But unlike Barnes & Noble, Amazon's growing publishing business also seriously threatens the business of publishers. So publishers and bookshops have anointed a new public enemy number one. Today, Amazon commands around 72% of adult new book sales online and 49% of all new book sales by units, according to the Wall Street Journal. Barnes & Noble operated on a model of being the big box store of books, carrying so many titles at such a high volume that they could offer lower prices than any independent bookstore could ever match. But it seems that Amazon simply beat them at their own game. For some, nothing will ever replace the experience of opening a new book, leafing through the pages, and adventure awaiting within. But as the world increasingly moves online, this may be a slowly dying moment, one that generations may miss entirely. Borders has already closed its doors after filing bankruptcy in 2011, and Barnes & Noble might follow suit if it doesn't embrace the digital world quickly. A couple of years ago, Barnes & Noble decided to try and get in on the ebook craze and created their e-reader, The Nook. While relaxing in stores with a book and cappuccino was previously an analog experience, the company's Nook e-reader offered an interesting twist. Now, in-store shoppers can read any book available on the format for free for up to 1 hour per day to assess their interest. However, while the logic was certainly there, this was ultimately a failed venture, losing the company more than $1 billion. Barnes & Noble Incorporated had been buyout bait for so long, it should not have been a surprise when the company announced last year that Elliott Management Corp had agreed to buy the big box book giant for $683 million, including debt. The bookseller had said that it was exploring strategic alternatives. This move has momentarily calmed fears among publishers and agents that the largest bookstore chain in the United States might collapse after one of the most tumultuous periods in its history. However, the calm period didn't last long, as you never know what to expect when a new owner appears. Barnes & Noble is in an ignoble position. The nation's last remaining major book chain seems headed for the boneyard. At least that's how Barnes & Noble's financial results look. As Amazon was surging, sales at Barnes & Noble went the opposite direction. In fiscal 2018, total sales came to $3.66 billion, down by nearly $1 billion from 2014, according to a filing with the Securities and Exchange Commission. Comparable store sales, a key retail metric, had fallen yearly over that period. Overall, net loss amounted to $125.5 million in the previous years, including a goodwill impairment charge of $133.6 million, compared with a loss of $47.3 million in 2014. While Barnes & Noble, despite all of this turmoil, has managed to stay afloat for far longer than many predicted, the past couple of years have been especially tumultuous, and no one can state for sure that the company will survive. Founded in 1971, the worldwide chain enjoyed decades of dominance in the book retail market, unfortunately until the internet blew up. That was when the shifting of CEOs began. Starting in the late 1990s, Barnes & Noble went from corporate villain to struggling underdog as Amazon rode its own arc from scrappy disruptor to monopolizing force majeure. Through the ups and downs, the original owner Riggio has either maintained control or been a short distance from the controlling seat, but the Elliott sale likely began the first truly new management era in the company's history. However, no one could say for sure how long it would take before someone else came and put their hands on the bookshop. Over the years, many CEOs have been hired and soon discarded, including Riggio's brother and another allegedly dismissed for harassment who later sued for libel. There are several companies who were once giants but have fallen into bankruptcy. Think Kodak, Blockbuster, and soon to be Barnes & Noble. The fact is, Amazon is dominating the book market, and if you're not first, you're last. Without continued growth, any entity would cease to exist. History is full of examples that support the notion that disaster occurs when expansion doesn't continue. The Nook e-reader doesn't sell like the Amazon Kindle, and Amazon is slaughtering Barnes online. All businesses and individuals should have a financial plan that clearly states monetary goals. It should outline exactly how you're going to create surpluses of money, what to do with the surpluses, and how to manage and invest that money. A plan suggests that you're doing something to make things happen, but it's not a historic evaluation of what has been done already. Plan means a method of achieving an end, a strategy of how one is going to stay viable and solvent as a household or a business, which seems like something that Barnes & Noble don't have yet. Though the Nook e-reader didn't sell like the Amazon Kindle, it still had a great role in the Barnes & Noble business. However, as of March 15, 2016, Barnes & Noble decided to no longer support the Nook tablets and close the App Store. This means the Nook Color and Nook tablet owners will no longer be able to download or update the Overdrive or Cloud Library apps. And while the Nook's catastrophic failure has rightfully received a great deal of attention, there were several other uncomfortable and unfortunate truths about the bookseller, including that Barnes & Noble was maybe not that good at selling books anymore either, as the company's retail revenues fell considerably. Some stated that maybe they were reducing the range of titles in order to move floor space to toys, games, and other products that generate high profit margins. However, this strategy would only drive book lovers to Amazon. In response to the COVID-19 pandemic, Barnes & Noble has decided to temporarily close over 400 of their 627 US stores. As different guidance was issued across the country at the time, the bookselling giant confirmed that they were working with state and local officials to determine the next steps to best protect customers and employees. However, CEO James Daunt has also warned layoffs might be inevitable. Daunt warned employees that as stores closed, employees with less than 6 months of employment would be laid off. Other employees would be first asked to use available paid time off, after which those employed at Barnes & Noble for at least 1 year could receive up to 2 additional weeks of pay. However, though some of their stores have started to reopen, Barnes & Noble has already laid off too many employees at its headquarters, including some book buyers, while also losing big in sales. Though COVID-19 seemed like the main reason for closing some of the stores for good, it turns out that Barnes & Noble had that plan long before the pandemic started. Seattle might not be the Big Apple, but its downtown core, once ripe with stores, is looking a little barren these days. Among many stores that decided to close their doors for good was also Barnes & Noble, which decided to close their bookstore on January 18th, 2020. But also in the last decade or so, the company has closed more than 150 stores. And just when in recent years there have been encouraging signs that the print retail business is rebounding, with publishers hoping that a revitalized Barnes & Noble could take advantage of that shift, e-book sales started to increase more than ever due to the pandemic, which will probably result in more closed bookstores than anyone could have imagined.